Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Boy, this week was about the Fed. Fed speak was everywhere. Interest rates are moving up at a speed not seen since, are you ready for this? 1987. And if the Fed's goal was to shock the markets, I think they accomplished that goal. I use that term, shock the market, because that's exactly what Fed Governor Bullard said when he introduced the possibility of a 75 basis point rate hike. Doesn't seem to be a lot of support for that. Fed Governor Mester said she's in favor of multiple 50 basis point rate hikes. She wants to see the overnight lending rate go from the range that it's in now, which is 25 to 75 basis points, to 2.5% by the end of the year. So that's a pretty aggressive move as well. And in his speech on Thursday, Chairman Powell confirmed that a 50 basis point rate hike is on the table. Add all that together, markets didn't like it much. And a couple weeks ago, we highlighted the fact that there were two qualified zigzag patterns alive in the markets. Well, there's only one left now, and that's the downward zigzag pattern. How low can we go? Let's take a look at the charts. At the time of this recording, it is late on Friday evening, so the futures market is closed. Taking a look at the S&P, you can see here's that downward zigzag pattern that I mentioned in the intro, and the target price on the C-Wave extension down just below that 400 level. We've talked about that for quite some time. The downward zigzag pattern has been placed for a long time as well, and we have that gap going from way back just above 400 that could be filled if we do indeed come down to 400 on the move to the downside. When you have a day like this, you certainly want to take a look and see what volume looks like, so you can see significant volume. To me, that's confirming volume. It's not one of those big massive spikes showing you that, boy, everybody that wanted to sell has sold. It's good, solid, above average volume, meaning that more downside is likely. Now, when we take a look at the 10-day moving average, you can see that we are just a bit, not a tremendous amount, but just a bit oversold with the fact that we did close on the low today. So we'll see if maybe at the beginning of the week we get a little bit of a bounce, but note how we consolidated right here at that 38.2% fib extension level for a bit, and then we had the big reversal day yesterday that came with Fed Chairman Powell confirming that the 50 basis point rate hike was on the table, and basically we've just been down ever since. So again, we'll see if we can bounce at the beginning of the week, but perhaps a bounce up towards that 38.2% level, get back to the 10-day moving average, but we could still go lower from here. So we're not that far away. We could see 420 at the beginning of the week before any sort of an oversold bounce as well. So we're looking at maybe entering into a bear market, and I wanted to highlight in next week's recording, we are going to start talking about what longer term levels could we go to if we are entering into a bear market. So I wanted to show you the weekly chart just to preface that, and you can see that the wave 4 has only retraced 33%, so that's not even the 38.2% fib level, so it's hardly even counting as a corrective level. Elliott really liked to see it get to that 38.2% level. But one thing to note here is for you Tom DeMark trendline fans, there's a pivot point there right at the top of the 3, and there's another pivot point right there. So what we could basically do is say, hey, we've got a trend line forming here. Note that the trend line is not real sharp to the downside. It's kind of angled in that 45-degree angle that I talk about all the time, and that would be indicative of the potential for a bear market where we just slowly start moving down, not anything sharp or significant yet at least, but at least at this point in time, we'll see where that plays out, and you can take a look at some support in here, and that's at that 420 level. We break that, and again, perhaps significant lows in an extended bear market. I'd like to know what your thoughts are. Where do you think the markets go from here? Post a comment underneath the video. Do you think we're entering a bear market, or is this just reaction to the Fed and we're going to bounce back and head back to the upside to new highs? Be interested to hear what you have to say. All right, so as we continue, I mentioned in the intro the speed of the movement. Now we're nearing 3%, and I thought that the markets weren't going to like 2%. Well, it didn't take us long to get to 3%, and the markets certainly haven't liked either one of those. But what I think the markets are not liking the most out of all this, are disliking, is the speed in which we have moved to the upside. And as I said in the intro, interest rates haven't moved this fast to the upside since 1987. And I think everybody knows what happened in October of 1987. Now, getting up to this level here, around 3%, perhaps that gives us a little bit of a pause. Something else to look at that could be a bit of a positive is we are starting to get some separation between that 10 and 50-day moving average. And you heard me talk about that a lot. I always say that no security in any time frame gets very far away from the 10-day moving average, but the 10 and the 50 don't separate much either. So at some way, those are going to have to close back together, and perhaps again a little bit of a pullback at the 3% level gives the time for at least that 50-day moving average to catch up and close the gap. But if we continue to go this vertically, I don't think the market's going to do well at all, and perhaps we get a little bit of a sharper sell-off than what the weekly chart is showing you, of more of a slower move to the downside. I wanted to show you the dollar. We looked at the dollar last night in our insiders meeting. We have an insiders meeting every Thursday night, and that's for subscribers only. And with that, I was talking about how the dollar had moved to the downside here, and I didn't like this drop. I'm really concerned about holding on to the dollar with everything that's going on globally. You've heard me say that in a bunch of our videos, and bounce back to the upside today. So a little bit stronger move, back higher here, a little bit of a doji on the chart here. We'll see how that plays out next week, but just tapped the 10-day moving average on the low. So personally, I was happy to see. I know international companies aren't so excited about a strong dollar, but I like to see the dollar continue to hold strength in everything that's going on globally. You may have seen the headlines that it's actually on the screen there, that Zelensky from Ukraine is saying that Putin wants more countries. He's not done with just Ukraine. And I've kind of felt that way as well. I think that Putin's goal here is to put the old Soviet Union back together here. So I think Ukraine is just the first step in his plan. Now, whether he can accomplish that or not certainly remains to be seen. Taking a look at oil, look at that symmetrical triangle in oil. Now, we talked about this in Tuesday night's TradeFinder. Tuesday night's TradeFinder is free. If you haven't joined us for a TradeFinder, please do so. We do it every Tuesday night at 9 o'clock. We talk about the markets. We look for trade ideas. We identified this triangle pattern here. And we also talked, because we do a live Q&A, about which direction we could likely break. Now, if we put the Elliott Wave pattern on here, it would suggest a break to the upside. And that's what Elliott would say. You're in an impulse pattern. When you have a triangle, you're likely to break higher. And it's hard to find a fundamental reason on why we wouldn't break to the upside. Why would we break lower? And one of our callers in made the comment, and he's spot on, the fact that, well, if everybody thinks it's going up, that in itself could be the reason that we go down. And the theory behind that is when everybody's on one side of the market, the path of least resistance is the other way. That's why you see that happen a lot, where the market goes in the opposite direction of what everybody thinks. So we'll see how this plays out. We did send out a trade on this to our alert subscribers at Elliott Wave Options, evotrader.com, and it's already profitable in one day. Not a lot, but it's already profitable, and it hasn't really broken out of the triangle yet. So my viewpoint, my experience has been, regardless of what the impulse pattern is, when you have a triangle like this, you got to protect both sides, and that's why we have our unique method of doing strangles, where we don't care which way it goes, and we're mathematically set up for the options to gain value as fast as possible when there's a break. Natural gas, we had an alert that was out on Mosaic, and we closed it out, and I mentioned in the closeout that the fact that we had this, what looked to me like a blow-off top here in natural gas with that gap up, was part of the reason why we closed out the alert on Mosaic. And one of our subscribers wrote in, that's another neat thing that our subscribers have. They have the ability to send emails and questions directly to me, and I respond in a timely fashion. And this subscriber questioned, why did natural gas have anything to do with the mosaic trade? Well, natural gas is used to make fertilizer. Mosaic sells fertilizer, makes fertilizer, etc. And so that turned out to be spot on, because if you look at a chart of mosaic, it has tanked since we closed that one out. So we had a nice gain in that in just under a week, and turned out to be spot on the timing. And so natural gas has basically gone straight down ever since. If we look at the 10-day moving average, we even closed below the 10-day moving average here. And there's that vertical move. If you've heard any of my recordings, you know I don't like vertical moves. When things go vertically up, they often come vertically back down. So not only was natural gas going vertically to the upside, you get that blow off top. That's when the FOMO kicks in, right? Everybody's fear of missing out, and they're like, oh no, natural gas is moving up, I'm missing out, and everybody comes in, and then that's the end, and then there's no more buyers, and so you get a bit of a pullback for a while. And so that looks like what's going on in natural gas. I think at some point there'll be another entry, but maybe it needs to calm down a little bit more before that. Looking at the Qs, you know my feeling on the Qs. I think they're going to underperform this year. In my opinion, one of the best looking charts in the market. Unfortunately, if you're long the market, it's a downward 5-wave impulse pattern with a wave 4 right at the very strong 61.8% fib level. And we're getting close to that wave 5 target. Now we have to break that support area down here at 320 first, but boy, we're not very far away from that. And when we get back below that, then I think the wave 5 is highly likely if we do break below 320. Looking at the 10-day moving average there, you can see a little bit oversold, like the SPY. Again, we could go lower. We could hit 320 before we bounce, and we're so close on both the SPY and the Qs. Again, we are a touch oversold, but maybe we get a little bit more before we get a little bit of a bounce. The beginning of the week will tell us. Looking at the Russell, probably some curiosity. Were we able to break through that 190 level yet? Not yet. So this 190 right here, 210 range is still intact here on the Russell. So far so good as far as staying in that range for 2022. You're almost rooting for it because it stayed in that range between 210 and 230 for all of 2021. Being a little bit facetious here, but we're getting down towards that 190 level, and if we're going to bounce, then we should bounce pretty soon. But we are in a qualified 5-wave impulse pattern to the downside, which is suggestive that we could possibly break that 190 level. Bitcoin, as we talked about last week, and we talked about this in Tuesday night's TradeFinder as well, the impulse pattern is gone. It's been disqualified, and so now we're just in corrective mode. And basically, we're just kind of fooling around with this area between 36 and 40,000. We broke below 40,000. That's where we are at the time of this recording as well. So we broke below it again back on the 18th, and it was able to jump back and close above. Not so today. So the question will be, can we get back above 40,000 and try to hold that, or are we just set to come down and test this 36,000 level? I don't think the weakness in the market is helpful to Bitcoin, but one day doesn't mean anything. All of our subscribers know that when we look for a break of support, resistance, major moving average, break out of a triangle, etc., we need a confirmation day. So we need 2 consecutive days. So one break below 40,000 doesn't mean anything, but if we get the follow through, we'll probably be close to 36,000 anyway. But if we get a follow through to the downside, that's likely where we're going. Looking at the Aussie market, we looked at that Thursday night because we have a lot of Australian subscribers at Elliott Wave Options, and we talked about how getting up here about ready to take a run at breaking into new highs in Australia. Really strong looking chart here, but we are a bit overbought, and just some separation there of the 10-day moving average, and I suggested that perhaps if we just went sideways for a while, let the 10-day moving average catch up, gather more momentum and energy to try to break to those new all-time highs would be great. Well, the market came down and closed below the 10-day moving average, but we are in an area here of massive support. So we'll see if the Aussie can hold here at this 74.80 level again and gather itself, as I mentioned, and take another run at making new all-time highs. So if it breaks that level, not good, because from one thing, that's a strong level of support, and the other is that this move from down here around 71.20 up to that 74.80 was pretty vertical, so there's really no resistance in the way if we can't hold that. So that's going to be key in the Australian market. So introducing a couple new international markets based on your suggestions. So one of them is we'll look at tonight is Brazil. Brazil had a great run there in the middle of March right into the beginning of April, a doji right there at the wave 3 high, and then we've pulled back down. And there's that commentary again, vertical move up. What happened? Came back down. Now we're at a wave 4 that's right at the 38.2% fib level, and we're back to an area that could act as support right through there. Let me go ahead and draw this line right in this area there, and somewhere, anywhere from right in through there is where we could possibly hold. So right at a decent fib level, an area of support. So perhaps Brazil catches itself and moves back up in a new march to a new high up at that wave 5 target. But had shown some great strength, just was too vertical to hold, and I hate those vertical moves. The UK, so we're looking at that. We're not in a 5-wave impulse pattern in the UK, so we're in corrective patterns and a gap down today. As you can see, we look at the 10-day moving average, and we are a bit oversold there as well. You take a look at volume, not quite the same kind of volume over in the UK as we had here in the US, but we are a bit oversold with that gap. Perhaps we get a little bit of a bounce, but we're in an area that has to hold here in the UK market. As you can see, right through this area right there is some area of quasi support resistance. It's been a bit with support back in October, November, resistance in December, broke above it back in January. It's held it in January and that test in February there. So can we hold here again? If not, there we go again with another one of those vertical moves, and we'd likely come all the way back down here, possibly to test the lows, because that was such a vertical move up from the early part of March. Last but not least, we always look at the VIX, and we had talked about this in our insiders meeting as well. One of our subscribers made a note and it followed along with what I was talking about, where we had this move up here in the VIX on Thursday after we had the big reversal from Chairman Powell's comments, and it was like, okay, markets moved. We had a big reversal day, finished to the downside significantly, but the VIX, yeah, it was up, but nothing significant. So that meant one of two things. Either one, don't worry about the reversal, no harm, no foul, we're going to go back to the upside since the VIX wasn't interested, or with a big reversal like that and closing low, something uglier was about to happen in the markets. Well, we got that answer today, didn't we? Something uglier certainly happened in today's market. So there's a big spike back up in the VIX. Are we going to move above 30 in the VIX? Are we going to get back into the mid-30s? Well, we'll find out next week, and I'll be here to report it to you. Hope you have a wonderful week. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.